A very good morning to all of you. In this video today I will cover the third portion of retirement or the death of partners. As of now we have covered valuation of goodwill, treatment of goodwill, calculation of new profit sharing ratio, gaining ratio and sacrificing ratio as well we have done. Now directly I am going to move towards the revaluation of assets and liabilities in case of retirement. So let's see what are the topic I will cover in this video that I have mentioned here, that revaluation of assets and liabilities, and two topics I will cover, and that two cases when alter the value of assets and liabilities in the book. In that situation you need to prepare revaluation account, capital account and updated balance sheet as on that date. And second case is when no desires of partner for alter the value of assets and liabilities in the book. In that case you need to prepare memorandum revaluation account, capital account, updated balance sheet as on that date. So these two cases also covered in admission of partner, but though I am doing here for retirement or death of partnership, so in that case and there will be slightly changes in the counting, and most of the part will be same. So let's come to the question. We will understand. Already I have covered the admission of partner. In that case I have covered the how to reevaluate your assets and liabilities with these two cases, like when to prepare revaluation account or memorandum revaluation account. But today I'll only talk about the retirement. I have taken one question, that is A, B and C are partners in the business sharing profits and losses in the ratio of 3:2:1. Their balance sheet as on 30th June 2019 was as follows. That balance sheet showing that sundry creditors, reserve fund, capital A, B, C are there. Then cash in hand, the asset side, cash at bank, sundry debtors, stock in hand, machinery for factory buildings are there. We will first focus on the additional information of this question. That is, on that day C retires from the business and it is agreed to adjust the values of assets as follows. Point A is saying that to make a provision for 5% sundry debtors for doubtful debts. Second point is to depreciate stock by 5% and machinery by 10%. And third point is factory buildings to be reevaluated at rupees 15,100. Show the revaluation account and partners account, capital account, and prepare the balance sheet on the continuing partner as on July 1st 2019. We have to see this question, and it is very easy. You need to prepare only revaluation account, capital account and balance sheet as on that date. Let's see how to do. First we will start from the revaluation account. Under the revaluation account we will write all the expenses, like to make a provision for 5% sundry debtors for doubtful debts, that will come in the debit side. 5% means 5% of this, let me take this later. 5% of this sundry debtor, 5% of 9,000, it will be 450 rupees. So first we will check. We will prepare one revaluation account through debit and credit. You will write the particular everything you need to write, and the debit side you will write this provision for doubtful debt 450 that I have calculated through this 5% of 9,000. You will also calculate and you will file this 450 rupees. Second one is to depreciate stock by 5% and machinery by 10%. You have to depreciate this stock in hand. It is given for 7,000 rupees and 7,000 rupees. Machinery given 6,000 rupees. For stock in hand you have to depreciate 5%, means 7,000 of 5% will be 350 rupees, and for machinery 6,000, 10% of 6,000 will be 600 rupees. Let's see, both the thing I have taken here. To stock 350, to machinery 600, and for calculation it is very easy. You can do, you have to take only the simple percentage of this value. Okay, now you have completed the revaluation debit portion. Now we will focus on the second, that one point A we have covered, B we have covered, C factory buildings to be revalued at rupees 15,100. So first we have to check how much factory value already it is there in balance sheet. So it was earlier in 14,000, now it has become 15,100. Obvious it has appreciated. So in appreciation it is the profit of for the business. So how much appreciated? 1100, 1100. So let's see, 1100 I have written here in the credit side because it is the profit. Now we will check, is there any information? No as such informations are given over here. So we will start completing this revaluation account. Let's see how we will do. See, so we will add up all this 450, 350 and 600. It will become 1400 of debit balance, and when we will check in the credit side, we will find only 1100 is the credit balance. So it is the differences of 300 that because this differences comes in the credit side, means this is the, when it comes in this side, credit side, you will assume that it's a loss, or if your debit side is excess over credit side. See, this debit side is excess over credit side, so it is the loss. And when your credit side is excess over debit side, so it will be the profit. Here profit always come, here losses always come. So in this case revaluation losses came. So you will distribute these losses along among these three partners. First we will check what are the percentage ratio. 3:2:1 is given. So 3:2:1 means 3 to 5 6. 3 by 6 A will take, 2 by 6 B will take, and C by 1 by 6 C will take. So 300 divided by you will do, and you will find, let me explain this one also, so it will be easy to understand. Pen, like for A it will be 3 by 6 multiply by 300, like that you can do, and you will find same way you will do for 2 by 6 and 1 by 6. So now you have completed your evaluation account. Second we will cover to capital account. For capital account you have to go for the balances, like old balance it is there A, B, C. First you will take all the balances of partners. You will write in the credit side by balance brought down, 10,000 10,000 10,000 it is given in the question, so we will take it. Second thing that what we will take, it is given in the question, 6,000 reserve fund. You have to distribute this reserve fund among the partners before the retirement of the partner. So what we are going to do here, in the same ratio 3:2:1, you will distribute this reserve fund among all the partners. This means 3,000, 2,000 and 1,000 respectively it will come, of 6,000 total. So we have covered. There is no other informations are given in for partners. Now you will see, you have to transfer these losses also in partners account. Debit side it will go because it is the losses, so it will be adjusted through their capital. So 100 150 150 I have taken. See, now there is no information, we will balance it. So 10,000 plus 3,000 13,000 of A capital is there, but here is also one losses of 150, so we will adjust this 150. After that their balance will be 12,850. In case of B, 10,000 plus 2,000 12,000 will be there, so 100 after the adjustment of 100 losses, 11,900 it is there for B, 11,900. For C, 10,000 plus 1,000 11,000 it is there. In this case 50 rupees there, his losses is there, and remaining 10,950. You can see here for these two partners it is showing that balance carried down, but him it is showing that 10,950 is C's loan. Why it is so? Because C is retiring here. He will not be a continue partner, so that's why it will not carry forward his balances. And this case what we will do, even sometime what happened, the business of is not in the position to return the complete amount of retiring partners. So what they do, they convert this value into the loans, and they write C's loan, like that they write. If suppose he is also have right to ask about the money, he can ask about the entire money return, but it is not possible for the business to withdraw to give him the entire money. That is not possible. So in that case it can be transferred into the loan, and he will get the interest as hereafter. So now go to the balance sheet. This is the balance sheet as I prepared as on 1st July 2019. You can check here, liabilities, assets. I have written the sundry. First I have started sundry creditor. There is no such information in sundry creditor, so I have taken directly 1,600 sundry creditors. And you can check here, C's loan I have taken 10,950 from here. This C's loan. This C's loan I have taken 10,950. As I told you, this will not come here after in capital account. So C's loan is 10,950. Then you go back and you take 12,850 and 11,900, both the capital of partners. So I have taken here as well. And go to the asset side. Start from the cash in hand. Cash in hand is in 600. I have taken here 600. Cash at bank, it is given 1000. I have taken 1000. Then sundry debtors, it is given 9000. But we have made one provision for doubtful debt of 450 rupees. So we have to subtract this amount also. Hereafter the balance will be 8,550. This. Then stock in hand 7,000, it is given in the question, but 350 it was the depreciation, so we have to adjust this one also, and hereafter updated balance will be 6,650. And machinery 6,000 minus 600, this is the depreciation also, so 5,400 will come. Factory building, it is given in the additional information that 15,100 it has become now, so we will take the updated value of building. So this is 15,100, and the total when we will do, you will find that 37,300 for the asset side, and the similar liability side also 37,300 will come. So now you can understand that your balance has matched, and your you have come your revaluation account, capital account, and balance sheet as well. Now come to the second case, that is memorandum revaluation account. Under this case we will prepare memorandum revaluation account. As I told you, why we prepare memorandum revaluation account, because the partners don't want to alter the value of assets and liabilities. So in that time what they do, in along with the revaluation account, they reverse the entries, and they prepare memorandum revaluation account. And second thing, in the balance sheet they do not change any value of the asset. That is the main aim of the memorandum revaluation account. Let's see the question. A, B and C are sharing profit and losses equally, had been trading for many years. C decided to retire on 31st December 2018, on which date the balance sheet on the firm was as follows. Capital account A, B and C is given 1 lakh rupees, 80,000 and 60,000. Creditors 80,000, cash 30,000, debtors 60,000, stock 50,000, plant and machinery 1 lakh, land and buildings 80,000 is given. And it is also given the some additional information that the value of the goodwill was agreed as rupees 81,000. The land and building had increased in value, and the value being agreed at 1,10,000. Plant and machinery was revalued at rupees 88,000, and it was also agreed to provide 5% in respect of debtors. Prepare memorandum revaluation account, capital account, and balance sheet. So let's see how to prepare memorandum account. But before going to start this, I'll let you know the memorandum. Actually, as I told you that when it is desired not to alter the values of assets and liabilities in the book, then a memorandum revaluation account will be prepared. And the first part of this account will be exactly the same as in the case of revaluation account, but in the second part entries shall be reversed, and the profit or losses of this part shall be divided among the continuing partner in their new profit sharing ratio. Yes. So what we will do, we will start to revaluation account. You can check it here. It is very simple and similar to the admission case. Admission case also we prepare memorandum revaluation account, but in that case what we did here, when after the revaluation account we distribute all the profits in the old partner only, and we exclude the new partner here. But in second part we include new partner as well, but here it is the reverse of, like you in first part you will take all the old partners, but in the second part you will exclude the retiring partners. Only this, the changes, small changes are there. Let's see, and in the remaining are the things are same. Here we will start the value of the goodwill. It is given land and building has increased, and so we will write the increased value, that it has become, earlier it was 80,000, but now it has become 1 lakh 10,000. So there is a differences of 30,000. The value of your land and building has appreciated by 30,000 rupees. So 30,000 rupees land and building I have taken. Then second part, plant and machinery was revalued. Earlier plant and machinery was 1 lakh rupees, now it has revalued 88,000. Means it is the depreciation case, because your value of the land and plant and machinery has decreases by 12,000 rupees. So you will write in the debit side, because it has become now expenses. So I have written here 12,000 rupees. Then check next. and it was also agreed to provide 5% in respect of debtors. Debtors is given 60,000, so 5% of 60,000 will become 3,000. So 3,000 also I have taken doubtful debt 3,000, and there is no as such informations are given in the question. So now we will finish it up and let's see. Land and building in the credit side I have taken 30,000, but in the expenses side, debit side, plant and machinery, provision for bad and doubtful debt 12,000 plus 3,000, total become 15,000, and remaining. Here in this case your credit side of revaluation account is excess over the debit side, means this is the case of profit. So this profit means 15,000. This profit you will distribute in their profit sharing ratio, and in the question it is given that the profit sharing ratio is equal. A, B and C sharing profit and losses equally. It is given top side. Here you can check here. Equally means you will distribute this profit in equal portion. See, 5,000, 5,000 and 5,000 I have distributed, and I have completed revaluation account portion part 1. Now see, you can check here that I have written reverse of entries on debit side, means you have to reverse 15,000, 12 plus 3. So you can also write this, reverse this entry separately, or if you want to reverse the entry completely, means both the entry you add up and you reverse the reverse of entry on the debit side 15,000 it is given, and for the reverse the entry for the credit side 30,000 it is given. So I have reversed it. But now you can check here, when you reverse it will become the case of losses, loss transfer. This will be the loss. You will assume that this is the losses, and this loss this time will be distributed among two partners. You will exclude the retiring partner. Here in the retiring partner, see, we have included in the first portion but we have excluded in the second portion. So these two guy will distribute this losses. So it will become the losses equally 7,500 and 7,500 for both. Let's we have completed memorandum revaluation account. Hereafter come to the partners capital account. When you go to the partners capital account, you have to take the as usual by balance brought down, like rupees 80,000 and 60,000 it is given in the question. Then by memorandum revaluation account memorandum, it is what profit you have distributed, 5,000 and 5,000 you have to add up. Then goodwill 81,000 it is given. So this goodwill you also have to write up 27,000 and 27,000 in all the partners. Then you go to the debit side of partners capital account. Then first will this goodwill will be paid by two partner, means existing partner. So equally they will distribute 81,000. This 81,000 total goodwill will be shared by these two partners. 40,000, 40,500, 40,000, 5,000 will be given by the A and B or existing partner. Second thing, you have to write the memorandum revaluation account. In this case, memorandum revaluation account also 7,500 losses for A and 7,500 losses for B you have to write. So I have written here. Now you can check here again. I have written this C loan. Though as I have told you that C can demand the entire amount, final amount or adjusted amount from the partners or existing partner, but he is not a business cannot pay the entire amount, or partly company or partners can pay. But here we can, better option is that you just transfer the entire amount in C's loan. So also here it has been done. Now we have completed this and move towards the balance sheet. As on that date I have taken cash. It is given in the question that 30,000. You can go and check it. 30,000 cash given. Debtor 60,000. Debtor 60,000 I have taken. There was no see here there is already we have done changes in debtors. We have provide the provision for debtors, stock also depreciated, plant and machinery also, everything. But you can see here the same value we have taken from the question, like cash, debtor, stock, and the same value 3,20,000 I have taken. There was no changes. There is no changes we have made. Why? Because we have already made earlier these changes in memorandum. We have reversed the entry. Hereafter there is not required. Okay, that's why this is the second case, that when the partner don't have desire to alter the values of assets and liabilities. So that's why there is no changes. You can come to the liability side. Creditors already it is given in the question 80,000, but C's loan we have taken this 92,000. Hereafter whatever the balance is remain with the partners A and B, we have taken 84,000 and 64,000. 1,48,000 it is given. So total balance matched, and we have completed memorandum also. So almost we have completed all the topic of revaluation account in the case of admission or in the case of memorandum. So as of now I have completed your valuation of goodwill, revaluation of assets and liabilities in case of retirement, in case of admission or death also we have completed. We have prepared revaluation account, memorandum, revaluation account, capital account, and updated balance sheet as on that date. So we have completed this thing. Now in the next video I would like to let you know about the how to treat the undistributed profit and losses and share of profit up to the date retirement, share in life policy, calculation of total amount due to the retiring partner, and I will also discuss about how to adjust the capitals after retirement in order to proportionate to the new profit sharing ratio, and one more topic I will cover to how to settle the total amount due to the retiring partner. So everything I will cover in next video, and that will be complete discussion about the retirement, and it will be over. Hereafter I will come for the next topic, that is the dissolution of partnership. Thank you so much for watching my video, and stay safe, stay at your home, keep watching my lectures. Thank you.